All right, everybody, welcome back to another video. I'm Matt with Matt Money, and today we're just going to be talking about, have you been investing your money appropriately? I think a lot of folks over the past 2-3 weeks have been messaging me saying, you're buying too early, save your money, or not necessarily doing the right thing at the moment. And my philosophy has always been always continuously be buying, depending on what your time horizon is, and be steady, consistent about your continuous contributions to the portfolio. And I think what we'll kind of talk about here, yes, you never know if the stock market will continue to go up, sideways, or down from here. But hopefully, some of the points that I iterate in this video will illustrate why you always need to be consistently buying and why you also need to be conservative with respect to the cash that you have on hand in case things continue to go worse or the opposite, maybe they go up. Uh, Really just trying to understand how you can balance your own portfolio depending on your own investment strategies. So hopefully this video will help you guys. Let's hop into the intro and then we'll get right back after it. All right, guys. So, what I basically want to talk to you guys today about is at its worst part here over the past month and a half or so, we've been down about 35 to 40%. Now, what I have here on the graphic is the S&P 500, and you can see that we peaked off here towards the middle to the end of February at about 3390. 3393 was the actual 52-week high here, but we actually ended up dipping down all the way to 2191, which if you do your calculations correctly, I think it's in the 35 to 40% down range. And what I basically want to show you guys today is if you continue to invest, the potential that you might have. So over the past month and a half, I think I've been highlighting to you guys what I've been doing over the past, I guess, 6 weeks or so since this market downturn has kind of happened. I was buying when this little trough here happened. I was buying all throughout this entire kind of upscale over the past 2 weeks that we've seen as well, or uptrend that we've seen over the last 2 weeks as well. And what I want to iterate to you guys is the fact that the past month's worth of buying or 6 weeks worth of buying is actually broken even. And what I want to show you guys is some of these positions are up 30-40%, and some of which I've actually sold as a swing trade, which I generally don't do, but I think in times like these when you need to be more cash heavy, I think that it's prudent to take your profits sometimes when you recognize maybe it's a stock that you actually didn't think you necessarily wanted to hold for the long term. And what I think I would also caution people is when specifically this sort of thinking, which we'll kind of get into a little bit later, is making sure that you buy companies that you would potentially want to be holding for the long term in case the trade goes the opposite direction of what you thought it would. And I think what we'll talk about is we'll talk about one of the cruise line stocks, Carnival Cruise Line, and also Royal Caribbean, and really talking about how I approach that sort of swing trade, and we'll get to that in a moment. But what I basically wanted to highlight here is that we're nowhere near 50% recovered from these recent lows of 2191 or so. We're probably not even halfway, maybe a little bit closer to halfway. I don't really know. But in terms of everything, we've kind of entered the bull market again. I mean, if you think about it, basically we've been cut down by about 35 to 40%. Now it's to the point where we're actually within 20% of all-time highs. And so it really only took 6 weeks to kind of exit the bull market and re-enter it. Now, I think that will be kind of dropping back off in the near term. I personally think that there is going to be some more near-term volatility, but what I want to say and kind of set people up for is you don't know what's going to happen, and hopefully when we hop into the rest of the portfolio, it kind of iterates this. But portfolio at this point, keep in mind the all-time highs, I'm down about 45,000, but keep in mind, look at this here, that I'm up more than 50% from all-time lows. If you kind of see that middle ground here, so if you were to kind of add these up, it's around 110-ish or so thousand that the portfolio has kind of swung peak to trough. And what you're seeing is, if we're up almost 50% back from the all-time lows compared to the recent highs back in mid-February timeframe, you would anticipate this to be about 55,000, 55,000. That's not the case. I'm a little bit higher than that, and I think that's based off the fact that I was buying during those recent lows. And what we'll kind of talk into is making sure that you're not just buying something for the sake that it's down 80, 90%. I know a lot of people that are buying companies that they would never have bought in the past just because it's down 80, 90%. Now they're trying to get in. And what I would caution you with is sometimes, yes, I would say that these deals can occur. These 80, 90% off deals can occur. But I think what ends up happening is people say, well, you know, who knows, it might go back up. But then they don't necessarily fully comprehend the entirety of the risks or the long term thinking of what happens. They think that potentially it'll bounce back up 40%, 50%, or halfway up where it kind of came down from. If it's gone down 80 to 90%, that means they're going to make 45 to 50% on their money just by quickly investing in it at the right time. But keep in mind that a lot of times when these companies go down 80, 90%, there's a real percentage of the fact that, or real chance that these companies might not make it out. Keep in mind, like companies that are really high quality, and we'll kind of dive into it a little bit quickly, and I might be diverging a little bit. Companies like your Caterpillars, your 3Ms, generally speaking, those sort of companies, your BlackRocks, your Johnson and Johnsons, those aren't going to be the companies that are hitting 80, 90% down. What you're going to be seeing are the companies that have high debt, have not been managing their cash appropriately over the past couple of years, have poor balance sheets, poor cash flow. And yes, I mean, oil companies can fit in there because they, generally speaking, are very capital intensive businesses. And so they generally use a lot of their cash flow to either reinvest back into the business or pay out to shareholders. So oil companies fit in there, but very rarely will you see companies with um, high grade balance sheets really dipping down these drastic percentages. So what I would just caution people is if you know a company isn't really run well, or if you don't necessarily if it's known if it's run well or has a good balance sheet, then maybe you should do a little bit further research before you invest in those companies. And what this, I guess, recent 6 weeks could also tell you, and I don't necessarily know if you're going to fit in this boat, is if you don't know how to figure out if a company is going to be good, has a good balance sheet before they enter some sort of crisis like we've seen over the past 6 weeks, then maybe your business is buying ETFs or index funds, and there's nothing wrong with that. In fact, that most people will probably benefit more from buying index funds and sticking with the broader market strategy than investing single stocks. I probably, for one, am probably better off to do that as well. But I love investing so much, and it's a hobby of mine, so that I would rather invest in individual stocks, even if that means I'm losing out on 1 to 2% per year. Granted, I've generally done pretty well and matched the market, if not maybe lost a little bit or gained a little bit. I'm not really keeping track, as long as the money and the cash flow continues to go up for me. But for yourself, just acknowledge where you are. Keep in mind the 5 key things that I like to acknowledge when you're kind of starting out investing, and that's your time horizon, your objective for investing, how active, passive do you want to be, and how continuously are you going to be contributing to the portfolio. And I'm really forgetting the fifth thing here, but those are key things that you should know when you're investing. If you're saying you want this money back in a year, and you need 10x times your money, well, you're going to be a lot riskier of an investor than if you need the money, to 10x over the next 30 years. And so I would just be cautious of what you're investing in and how continuously you're investing and what your time horizon is, to make sure that what you acknowledge is your risk. And that was the fifth thing, is your risk. So I can't believe I forgot that part of it. But obviously understand what your risk tolerance is. There's people that have me following on the channel that all they do is invest in bonds because they think that that is the short term strategy for them, or even the long term strategy for them, and they want to maintain their capital preservation. They want to preserve their capital. They don't want to have any large price swings or volatility like we've seen over the past 6 weeks or so, and that's fine. I mean, that's their strategy, and if they're happy with it, then that's something that they can continue with. But what I hate to see is folks really entering the market in times like these and saying, "Well, I don't understand how I lost money," and it's like, "Well, you invested in a bankrupt company. Of course, it's going to go to zero." So, what I would just caution people with is really hopefully people take away two things, three things, is those five key things that I was talking about with respect to risk tolerance, long-term time horizon, or what your time horizon is, your objective, how active, passive, and how continuously you're going to be investing, and acknowledge how that what you're doing fits into those key things that you need to personally answer for yourself. I can't answer that for you. And the second thing is acknowledging that if you are going to be continuously adding to the portfolio, making sure you have sufficient cash on hand. I knew a lot of people that I was following that had already run out of money to invest into these markets when they were still in the early February, or sorry, early March, mid March timeframe. And keep in mind that at that point we were only 20 to 25% down. They had another opportunity to pick up a couple more tranches down here in end of March timeframe for even more of a discount. And I think that that would be wise for people to hold a little bit more cash or acknowledge what their kind of monthly cash flow into the portfolio is. If you're investing 1,500 a month into the portfolio, let's take for instance, maybe you want to have 2 to 3 months of additional capital sitting on the side. One, for emergency purposes. Of course, you should always have some sort of emergency fund, and that's very dependent on yourself. I mean, some people say 6 months, some people say three, but I think that regardless, you need to have a couple months of contributions that you typically add to the portfolio on the side in case of when you might have that rainy day fund and you need it to say, hey, I'm down XYZ. And you can accelerate. I'm not saying dump it all at once, because I think that's what a lot of people did within the first 3 weeks or so of this sort of recent cycle here that we're kind of seeing. Um, but really to say, okay, well, maybe I'm going to add an additional 30% compared to what I'm contributing. So instead of 1,500, you're adding 2,000 every week or 2,000 every month, depending on what your specific criteria is. And that might assist you in accelerating what you're actually buying, but it's not going to drain out your bankroll as quick as if you're going to add, huge tranches. Keep in mind, yes, I mean, I added some big tranches here as well when companies were dropping like a hat. Keeping in mind like the energy stocks and stuff like that, I ran out of money. I'm going to be completely transparent. I tried to preserve capital, but keep in mind, I was also trying to invest as much as I could. And I missed this final bucket for some of the stocks that I wanted to buy, like BP, Shell, Exxon. I probably bought in this time period when they still had another 10 to 20% to go. And I did get some great buys in here. I got Visa in here. I got some Royal Caribbean, some Carnival Cruise Line in here, which we'll talk about just a second. But I think what a lot of people failed to do was they failed to pace themselves, including myself, in there. And what I ended up doing is I did have about 6 months or so worth of cash in terms of my expenses at this point. But what I was afraid was that I didn't necessarily know exactly what's going on with my personal situation with respect to job and whatnot. So I wanted to make sure that I kept that cash pile kind of in preserve until I figure out a little bit more what's going on. But what I would hate to say to everybody, and I hope that you're not in this bucket, is that you are sitting here saying, man, I wish I bought more. So I guess everyone's going to be saying that. And there could be an opportunity for folks to buy more for sure. And hindsight is 2020. And I think what people are going to recognize is, man, I should have bought more. And what I think people that might be saying that is realize, did you buy it all, or were you waiting to for the market to go down 50%, 60% for you to buy in. And if the case is that you bought but you didn't buy enough, well, maybe just contemplate like, okay, did you did you look at your cash management strategy good enough, or were you hesitant because you thought it would go down more? And of course, everyone's trying to manage their portfolio, manage their cash influx into the market to make sure that they're buying at appropriate times. But I knew a bunch of people that continue to ask me every day or every other day, do you think it's going to go back down? Do you think it's going to go back down? Do you think it's going to go back down? And I think that is a sign of somebody that unfortunately is a little bit unseasoned with respect to investing, whether they're just hopping in for the first time or whatnot. And I think that that's natural emotions. So I'm not trying to poke fun at anybody for that, because I understand what can happen when you kind of have a trade going against you, or you think about entering and the price is kind of dropping like a rock. And I think that what you need to do is just, if that's a concern, you think it's going to go down, buy a quarter of what you wanted to buy, buy a half of what you wanted to buy. And if it goes back down by 10, 20%, you still have that other three quarters of your position or half of your position that you could then invest. But what I would like people to acknowledge is the price is what it is today, and you can do your economic evaluation on what the price is today. And all you can do for the future is predict, but that prediction can be right or wrong. And there's a lot of things that can happen with the market. Cash can continue to outflow and the price can continue to go down, but you can't predict that. What you can predict is kind of understand what a company's cash position is now, what their balance sheet is now. Try to understand how the particular crisis or recession that we're in may impact that business, and look what the current price is. And would you pay money for that price? Do you think that's a good deal for the long term? And you can answer that question today. What you can't answer is, do I think it's going to go down another 10 to 15%? I mean, that's dependent on not only the company, but that's also dependent on the broader market. That's dependent on a lot of things. So what I want to highlight is we're only 50% back up from where we were in recent lows in the end of March here, but we're up 65,000, not 55,000. So somewhere we picked up an additional 10,000. That could have been good stock picking. That could have been just the companies I'm invested now. But what I have a good feeling of is that it's the recent purchases that I've made in the portfolio. And you can see that a lot of these positions at the very early on, late March or late February, early March, are still down. So I still have some positions in stocks, energy, like I mentioned a little bit earlier in the video, that I'm still down upon. But I did purchase some more, and you can see a lot of these ones that I've been purchasing over the past 2 to 3 weeks are very green, some of which are up double-digit percentages and also 30% percentages. What I do want to talk about is a swing trade I made here in Carnival Cruise Line and Royal Caribbean. Looking at the balance sheets of these two companies and looking at their kind of run rate with respect to how much interest payments they had to pay on an annual basis, I thought Carnival Cruise Line was the better of the two companies to buy. They at one point were rated about $5 billion a piece. I believed that Carnival Cruise was trading about, I think, 30% or 35% less in terms of valuation than Royal Caribbean. So Royal Caribbean, in my opinion, was should have been trading, if they were trading at the same equivalent price for what they were kind of earning. Royal Caribbean should have been down another 30%, and they were not. I bought this at 25.87, so not at the very bottom. I definitely could have gotten it at a little bit lower. I think 22, 21 maybe it hit. And Carnival Cruise definitely dipped into the sevens. But what I do want to highlight is I took profit. I mean, it wasn't a huge position, but I took $1,800 and I was able to get, a 33 or almost a $700 return. So 33%ish return, maybe closer to 35%. And I know for a fact that Royal Caribbean ended up being a lot higher. So these are hard coded now. These aren't active prices. In fact, if we were to update, it probably closed like 36, 37, and I'm probably going to kick myself. Yeah, so 37. And part of me is going to wish that I held on to that, because that's another 120 or 140 bucks that I missed out on. But I can't get upset when I took a profit off something that I held for less than 6 days, and made $700 that I can now take and invest into something else, whether it's Visa, whether it's AT&T. I will mention that I did buy some AT&T today, about 50 shares at below $30. I thought it was relatively well priced, just based off the fact that the broader market has kind of gone to the point where it's up about 50% from where it was, in terms of the latest downturn, or the latest lows compared to the highs. So it's definitely up 15 to 20%. But AT&T, yes, it might be up, 10, 15% from the 26.15 or something that it hit last week or 2 weeks ago, but it's still relatively depressed compared to some of these other companies. So I wanted to give a good purchase in there, increase my share count. I think I'm up to 274 shares total. So this 50 shares added to the other 224 shares or so that I had. So happy to have that. It's a good addition. Gives me another $100 a year or so in dividends, and I think it's a high quality company that'll be around for a long time. But you can just look at some of these other companies that I'm buying: 1 share, 2 share, 3 shares, 9 shares in some cases, and you can see that we're up. And these small little buckets aren't, anything to scoff at. But keep in mind this Visa payment. If you liked it at 200, you were buying it at 200. Why wouldn't you buy it at half the price at $136? That's what I did. I bought 20 shares. Nothing to really scream about, but this is $769 a buffer that I can keep. If I wanted to swing trade this and sell it today, I could. I'm going to hold on to these bad boys forever. I actually used to own Visa back in in 70 point in my Roth IRA, and unfortunately had to sell it due to some tax reasons. But that year I exceeded the Roth IRA limit, and I didn't necessarily know. So I had to sell something, and unfortunately I made the wrong decision. I sold Visa. I should have sold something else. And by the time I wanted to buy back in, it was way above price. So this is about $40 a share that I can now take to the bank, and if I wanted to. But this, I think, in the long term is going to go back up above 200, and that's going to be $65 at least a share, that I can have as a buffer. Keep in mind, I'm going to be waiting for this dividend to continue to increase at about a 20 to 25% rate a year, because that's what Visa does, at least in the short term, and at least the past 5 years. That's what I've been doing. IJR, quick swing trade here. I'm going to keep this one though. Quick entry, I should rather say. Bought 4 shares with some money that I got from YouTube, thanks to you guys watching the channel. And so I bought 4 shares of this bad boy, and just off these 4 shares, I'm up 32 bucks, 16%. And so I'm going to hold these, and it's going to be paying me, another $4 every single year, hopefully for the rest of my life, and hopefully continue to grow as well. Another swing trade potentially with Cosmos, but that's something I might add and continue to have for the long term, up to 1,000 or so shares in that company now. Here's a good success story though: buying Realty Income. I think a lot of folks have been buying at a great price with Realty Income. So a lot of folks were buying it at the same price as I was. Believe it or not, it swung 15% in a single day. I remember it started at 49, dropped down to 47. I was like, that's a good price, I'm buying in. Later that day, I bought for $41. And I think the next day it dropped down to 37 or 38. And I know Jason from JMac Investing got in at a great price. But if you guys are buying this at 70, high 60s, why wouldn't you be buying it at 41? I know there's short-term volatility in the market that's going on, but it's one of the better quality companies that you can ask for and buy in. I knew people that had Boeing at $300 a share, some people buying it at 360 in some of the Facebook group that I have here, and maybe the PPCE and Facebook group. And I got it in at 106 for some of my shares. My entire, I think, cost basis is around $136. So I think overall I'm up. I bought some here at 106, and I bought some at 130, and I think I bought some at 160. I think it's going to be some short-term volatility, and I think in the long run, it's going to be a fine company. It's going to be okay. And I think a lot of folks are really just, throwing the baby out with the bathwater and not acknowledging a good deal when you can buy it. BlackRock, for instance, up 25%. This is a phenomenal dividend paying company. Has been growing the dividend like crazy, and the stock price has been going wild if you bought in at the right time. BlackRock, if you don't know, holds the most assets under management in the world. Before this whole thing happened, they had over $7 trillion under management. Keep in mind, if you charge 0.04%, 0.09%, I mean, you're going to get billions of dollars in revenue. That's what happens at BlackRock, and they give a portion of that high margin cash that they get through the portfolios that they help manage and give that back to the shareholders. And it's just been growing like a weed. Bought it at 365. It's almost up. Almost $100 a share. It's up $85 a share. Granted, it's only 2 shares, but this helped lower my cost basis down in my main portfolio down to $409 a share, when I think it was $430 before. $423 was what it was before. So just by that, lowered my cost basis by about $14 to $15. 2 additional shares and another $28 a year in dividends. And that's just some of the successes that you can build. And keep in mind, guys, that this is still down 20 to 25% from all-time highs, and we still have an opportunity to build on some of these companies in the long term. And I think what people get scared about is, they say, well, it could go down another 10%. It could go down another 20%. Okay. I mean, that's fine. But when we go back to normal and we continue to go and build on this cycle in the long term, the prices are going to come back. And you don't know what the price is going to be tomorrow. Things can drastically change. They could come out with a vaccine tomorrow, and the market goes back to where it was 6 weeks ago. Do I think that's going to happen? Likely not. But what I think could end up happening is, very well, we could remain flat from here. And you could, be saying, well, it's going to go back down 40 to 50% from all-time highs, and I'll wait to buy then. And it might only go back down to 30%. We might see a 5 to 10% drop from where we are today. And you'll just be sitting on the sidelines, and then you'll never have picked up shares. But what ends up happening is folks will start buying once it's within 10% of all-time highs again. And then what ends up happening is they're only buying companies at the high. And they're too afraid to buy companies when things are going down, even though they're high-quality companies with great balance sheets. So I really hope this video was useful for you guys. It was kind of a venting session for you guys, and really just my thoughts. I didn't really have any specific topics for you guys that I wanted to really highlight, other than the fact that so many people I know have been telling me, oh, I think the market's going to go down. Oh, I'm holding my money. I didn't buy, but I think it's okay because it's going to go back down. And, you could be right. I'm not going to lie with you, but I think what you need to recognize is it's better to buy companies when the opportunity shows itself than to hope that it can continue to go down. One involves concrete numbers. You see the opportunity, you can purchase the opportunity. You can excel and expand and do well on that opportunity because it presents itself today and right now. The other one is seeing that opportunity in front of you and hoping that you get a better opportunity down the road. Hope is not a strategy. Unless you honestly know something else that everyone else in the world does not, or you can predict everything, it is not a very good strategy to continue to hope. What I would suggest is, depending on what your time horizon is and depending on your strategy, if you're a buy and hold sort of investor, you need to be considering investing on routine bases to continue to add contributions to the portfolio on a consistent basis. You get a bonus, you wanted to invest your bonus, invest the lump sum. There's nothing wrong with that. But I think the best thing that you can do for yourself is make sure that you're investing consistently every single month. It's worked well for me. Do I think I can time the bottom? No. And I think a lot of people in this market can hopefully look at themselves and say, I can't time the bottom. If everyone could say that they timed the bottom, then they'd be sitting up 20% in their portfolio right now on everything that they owned. And I don't think that you can introspectively look at yourself and say, I could have timed that this is going to happen. Now, Do I think that this is the absolute bottom? I don't know. And I'm going to be completely transparent. Do I think it's going to go down, to 40, 50% again from all time highs? It very well could. I don't know. But I'm not going to sit here and try to say I could tell you guys that it was going to do a pivot point at 22.37 and rally up 20% and go back down. I think if you honestly think you could tell that, then you're a wizard. But I doubt that a lot of you guys are sitting here actually being able to say to themselves that they actually predicted that. And who knows, it could remain flat here, it can continue to go up tomorrow, it could go down. But I think you just need to sit here and retrospectively and introspectively look at what happened, and are you making the right decisions? And if you're not, you have an opportunity to either do this in the next time that you see some sort of short-term opportunities, or just continue to decrease your bad habits and be emotional and do the incorrect thing. I'm not talking about anybody in particular, but there are some people that I talk to on Facebook and YouTube channel that are either antagonizing me and I don't. That's just you know I that just goes right over my head. I don't even think about it. I don't think twice. I'm following my strategy. It's worked for me. Have you followed any strategy? One or two, if you have followed a strategy, has it worked for you? And just think about that, ponder that, and I hope this video finds you guys great. And hopefully it wasn't too abysmal. Hopefully I didn't hurt your feelings too much. But hopefully you learned something as well. And I'll talk to you guys in the next video. Cheers.